Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. Great to have your company this Wednesday afternoon. I'm Juliette Sarli. Let's get straight to the markets. And we are recovering a little bit of what we lost in the last hour or so. It looked like we were going to end pretty flat. We started the day's trade up by around 0.5%. Then we got to an even bigger gain than that. Then we started to peter off in late afternoon trade. There's still, of course, quite a lot of uncertainty over what's happening in the Middle East, particularly after we saw that US forces carried out strikes against Iran just hours after President Trump blamed Tehran for shooting down an American military helicopter off the coast of Oman. But in the late afternoon trade, we have started to see a little bit of a pickup. Of course, lots for investors to get excited about this week, including the SpaceX IPO, which we're going to talk about in a moment with our guests. But let's get to the themes of the day, and those geopolitical jitters certainly weighing. Also, this Boots bid, or multi-billion-dollar Boots bid, if you like. Anybody that's been either through Heathrow or to the UK knows that iconic pharmacy chain. And Sigma Healthcare, the owner of Chemist Warehouse, looking at expanding further here globally, saying it is in early talks about a potential $14 billion takeover of the UK pharmacy giant. Now, competition could be fierce because Canada's wealthy Western family, which owns the pharmacy chain Drug Mart, are also reportedly in discussions with Boots private equity owner Sycamore Partners. But just all, of course, this M&A action. We also had Steadfast coming in late in the last hour or so. So getting quite exciting for a Wednesday. And then, of course, we've got inflation insight with China's factory gate inflation at a nearly 4-year high in May. Eyes now turning to tonight's US inflation report. And that might provide the clearest signal yet on whether the new Fed chair, Kevin Warsh, will keep rates higher for longer. Investors do seem to be betting on tighter Fed policy, with US 2-year yields at the highest in over a year. Let's quickly run through these sectors on the market, kicking it off with consumer discretionary. A pretty good bid coming through for these stocks today. Lovisa up 2%, Super Retail up 5%. Looking at the tech stocks, though, mostly weaker there. Life 360 was down 3.5%. Xero was down by around 2%. A bit of a lackluster session on Wall Street overnight, with tech stocks coming under pressure. Looking at the miners, though, BHP was pretty flat. Rio, Fortescue, South32 and MinRes coming under pressure. And then, of course, that healthcare space with Sigma getting a bit of a thumbs down from investors. I mean, Sigma's only valued at $33 billion, so investors seem to be weighing up the billions of dollars that it would likely need to raise a deal of a $14 billion takeover, and seem to be quite uncertain about that. Looking at some other stocks on our radar, Steadfast Group there, entering into an exclusivity deed with a US consortium that's willing to pay $7.7 billion in cash for a full takeover. The Sydney-based insurance broker network, sending its shares up 35%. There we go with Sigma again. Wesfarmers, though, up by about 4%. It had its strategy day today. It touched on Bunnings. It touched on its lithium expansion. Megaport, though, under pressure. It selected Vast Data as its platform provider for its global network and computer infrastructure. Core Lithium was down around 7%, signing a binding agreement with Glencore to sell 25,000 tonnes of lithium fines. Do you say fines or finnes? From its Finniss operation in the NT. Don't know a lot about lithium, I have to say. And defence tech company Boresight rocketing almost 90% at one point, looking like it's going to close 70% higher after listing on the ASX. So its ticker code is BST. We had Best and Lest up there because that's what the ticker code used to be, but it's now Boresight. Lots happening. Let's get to it with Mark Gardner from MPC.
Good afternoon.
Good afternoon. Don't really know where to start. Maybe we'll start with all this M&A activity. Steadfast, Sigma, Boots.
Yeah, look, I mean, I think it's sort of symptomatic of the ASX. You know, there seems to be a lot of flow into the ETFs, not that many mid-cap fund managers around, and very deep holes and not a lot of recovery in some stocks. So that's a great hunting ground for private equity, essentially. I mean, we saw JLG just get frustrated with the ASX at one stage and not understanding the business and not bothering to even understand the business, even when they communicated clearly. Steadfast as well was really out of favour, but and it just goes to show that you can't trade or you can't invest for for takeover bids because it's too low margin. But the But there's I think that mid-cap part of the Aussie market is extraordinarily cheap because it just lacks momentum. So, or any sort of backup volume that comes through. And once you're out of the 200, you don't tend to attract a lot of capital. So, and that becomes problematic in a 6-month earnings cycle because you've got to wait 6 months until the next one comes around.
Yeah.
So I think it'll be happening sort of more and more, I would imagine, and then obviously Sigma and Boots as well. I can't see them winning out against the Canadian family group. I mean, that Western, it's enormous, very deep pockets.
It's like the Walmarts, aren't they?
Oh yeah, it's huge. So I dare say they're not going to take a JV sort of role. The Sigma CEO has been very vocal about. They want to be a big brand in the world, and this would make the number 3. But I dare say, if they actually do, if the Westerns walk away, there'd be probably a 5-odd bill cap raise, more than likely.
Yeah.
And that'd be a fairly deep discount, given they're only 34 billion themselves. So, but interesting, and it could be a slightly different cultural fit because Chemist Warehouse and Boots sort of sit at different ends of, I guess, I don't know if there's such a thing as luxury pharmacy, but they are a little bit fancier.
Though, right? Chemist Warehouse, I mean, I love it because it's so cheap, but it's like going to a discount $2 store. And then Boots is lovely.
Yes, so whether that business model fits, etc. I mean, to be honest, I like the ambition. If they miss out, they miss out. But, I like the fact that they're looking elsewhere and their models worked very well. It's been largely pretty successful, and I think they want to grow. So that's your positive signs from a company that again is probably priced pretty cheaply as well.
Yeah. Now, speaking of priced cheaply or not, but something that did incredibly well today was Boresight, BST. It used to be Best and Less, as we discussed. I mean, this is just really going in on everybody's appetite for defence here, right?
Yeah, and look, it's such a small market cap. I mean, even at that up 70-odd%, it's only talking sort of $70 or $80 million or thereabouts. They were barely loss-making. I think they lost $600,000 last year or something like that. I think to justify where it's settled today, it's going to need probably a 5 mil and maybe a couple of 2 or 3 mil contracts. It's not in drones; it's in drone targeting and training, which they're going to need. There is some execution risk there, expanding to the US, but to be considered for US military contracts, you've got to be in the US. And the likes of Rocket Labs and Planet Labs and all those that were founded out of New Zealand and Australia and things. They had to go there because there's rules around defence and sharing of information for military contracts. So, look, I mean, if things go well, yeah, I mean, look at Drone Shield got to an $8 or $9 billion and came back down again. And if that theme goes pretty hard and all they've got to do is win a few contracts, the Australian government's got $15 billion worth of contracts in that sector. They're not going to get a lot, because they're in the targeting, not the actual drone part, but they are a necessity. So, but they've only got to win 10, 15 mil worth of them and they could rock it. So, yeah.
I love all these puns. It gives us a lot. And speaking of rocketing, what's your view on SpaceX?
Look, I wrote in the newsletter yesterday. Look, if you're a space nerd and you love it, put a little bit of money in it because this is probably the most exciting IPO, I would say, in history. Good businesses might be exciting, but this is space is a really cool thing. It's captivated my imagination. But 1.75 trillion on 15-odd billion in revenue, a loss-making AI business, and management really hustling hard to get it included in the index, reeks to me of them private equity pushing to get this thing dumped out to passive investors and ETF and pension fund investors. But if you do go in it, you're either going to be one of two things. If you're in for quick buck, you're going to have to be out probably fairly quickly because rockets will explode. Earnings will not go anywhere. I think the most expensive Mag 7 company is NVIDIA at 23 times earning. This is 100 times.
But can you not argue we just don't know anything like this? You've never been able to invest in space before. And if, as Dan Ives from Wedbush says, it merges with Tesla, creates the world's biggest company.
Categorically. And don't get me wrong, I'm excited about this as well, just not at $1.75 trillion.
Yeah.
And because these realistically, Elon does deliver, but never on the timeline he says. It's probably 5 to 10 years minimum before a lot of this stuff's going to play out and there's genuine revenue. But Tesla's traded at high PE ratios for an eternity. It's very exciting to roll that into one. I think it's largely operating as one anyway. I'm a massive fan of Tesla and of Elon. I just think you at some stage in the next 6 to 12 months you will get it at $1 trillion market cap, not at 1.75. And I'd be, on pre-IPO markets that are on some of the blockchains like Hyperliquid, I think it's around 155, 156, traded as high as $220 a share. The IPO price is 135, so there's still some confidence there. I would dare say be agile, and then don't put in a lot of money necessarily, but be patient because it could take 10 years, but it could be brilliant.
I think it's out of luck if you haven't already applied for the IPO, but we'll see what happens. And Mark, really interesting stuff because it is something that we haven't seen so far in our lifetime. We've got another couple to come,
Anthropic
exactly.
and OpenAI as well. So we've never seen anything like this.
Yeah, Mark, great to chat. Thank you as always. Mark Gardner from MPC Markets. Getting back to stock specifics, of course, we were talking about Sigma, there being the stock of the day, and Andrew had the pleasure of speaking to Andrew Weiland from DP Wealth Advisory, Henry Jennings from Marcus Today.
I'm very familiar with the Chemist Warehouse model, and it works beautifully well. They have done extraordinarily well out of it. To take on Boots, to quote Sir Humphrey, that would be very courageous. Clearly the UK high street is a troubled place at the moment. The UK economy is hardly in a fantastic place.
We don't have a great track record as a country going offshore. And there are always exceptions. Westfield immediately comes to mind. Brambles up until recently. But there are equally many, many stories where companies have gone to the UK, dare I mention corporate travel, albeit that is a very unfair comparison. But nevertheless, there is plenty of companies that have gone to the UK and have regretted doing so. Lend-Lease is another one that immediately comes to mind. So I'm with Henry. I hope that they don't succeed, frankly. There's certainly opportunities here in Australia still, albeit, as we said, Australia's under a bit of pressure. I think it's a hold as well, but it is a very fully priced hold.
10 stocks picked by you, 2 experts, 1 hour.
Let's get to the companies that have been nominated by you.
Put a little in both because you never know where the landmine's hidden.
I think we'll see some upgrades in the next 6 to 12 months. Analysts normally play catch up, so I'm going to call this one and buy.
The call is brought to you by Centuria, an ASX-listed property fund manager with $21 billion in assets under management. Want to diversify beyond equities? Explore the Centuria Sydney CBD Prime Office Fund at centuria.com.au.
So we rallied into the close. Let's have a look at some of the leaders that helped get us there, including Steadfast, this really impressive 35% jump, with a US consortium upping the ante in the battle for the company with a $7.7 billion bid priced at a big premium. Reece also had a very good day, up by about 10%. A little bit of upside coming through in some of these consumer stocks too. So Nick Scully and Debra Group both looked good. The laggards today included Silex Systems down about 10%, 4D Medical, Ora Banda, Liontown and Bellevue Gold. Liontown was one that Victor Gomes from Eager Capital was talking about with Andrew, so you can find that online shortly. Let's have a look at the small end of town, and Brisbane Broncos rocketing higher, up by 13%. Cogstate also had a good day, while the laggards today included Terra Metals and PC Gold. All right, of course, it's all about the US inflation print coming through tonight. The CPI expected to tick up to 4.2% year on year. Also some quarterly earnings from Oracle, and the Bank of Canada handing down its interest rate decision. I'm going to have a really good chat with David Buckland from Montgomery Investment Management tomorrow about how he thinks the RBA may go down the path of the BOC and the RBNZ It's quite a fascinating viewpoint he's got, so make sure you tune in at 11:50 tomorrow. All right, let's have a look at what's happening tomorrow. Melbourne Institute inflation expectations, also the Light and Wonder AGM, and Super Retail holding its investor briefing. A quick final check of the local market though, and we are up by 0.4% there on the COB 200, while the S&P ASX 200 has finished higher by 49 points, or 0.6% to 8,653 points. All right, we'll see what tomorrow brings, particularly with all these moving parts in the Middle East. We'll catch you from 9:45 a.m. Eastern tomorrow.